What's up, crypto fam? I need to talk to you about something massive happening with Hyperliquid right now. We're sitting just 12% away from all-time highs. Whales are accumulating like crazy, and the charts are screaming one thing. But before I reveal what that is, smash that like button, because what I'm about to show you could change everything you think you know about Hype's next move. Let's dive in. Alright, let me paint the picture for you. Hyperliquid, ticker Hype, is trading at around $44 as I'm recording this. Now here's what's got me absolutely fired up. We're looking at just a 12% gap between current price and that juicy all-time high of $49. But here's the million-dollar question that's keeping me up at night. Is this the calm before the storm, or are we about to see another brutal rejection that sends retail traders running for the hills? See, in this market, being 12% away from ATH is like being on the edge of a cliff. You either soar to new heights, or you plummet into the abyss. And trust me, I've seen both scenarios play out more times than I care to remember. The crypto space is absolutely ruthless right now. Bitcoin's been showing strength, altcoins are picking sides, and institutional money is flowing like never before. But Hype? Hype is in that sweet spot where fortunes are made or destroyed in a matter of hours. So buckle up, because what I'm about to reveal using on-chain data, whale movements, and technical analysis is going to blow your mind. This isn't hopium. This is cold, hard data that the smart money doesn't want you to see. Now, before we get into the juicy stuff, let me ask you something. What separates a moon mission from a rug pull? What makes the difference between a 10x gain and watching your portfolio evaporate overnight? The answer is simpler than you think, but most traders completely ignore it. They're too busy chasing green candles and following influencers who couldn't trade their way out of a paper bag. I've been analyzing crypto markets for years, and I can tell you this. The real alpha isn't in the price action you see on your screen. It's in the shadows. It's in the whale movements that happen when you're sleeping. It's in the order books that most people never even look at. And right now, something absolutely extraordinary is happening with Hyperliquid that has me more bullish than I've been in months. But it's also got me questioning everything, because what I'm seeing doesn't match what most people are talking about online. You see, while everyone's debating whether we're in a bull market or a bear market, while they're arguing about macro conditions and Fed policy, the smart money has been quietly positioning themselves, and I mean quietly. The data I'm about to show you comes straight from CryptoQuant, and if you're not familiar with CryptoQuant, they're basically the gold standard for on-chain analytics. No BS, no marketing fluff, just raw blockchain data that tells the real story. But here's where it gets interesting, and a little scary. The patterns I'm seeing in Hype right now, they're the exact same patterns I saw before some of the biggest breakouts in crypto history. But they're also the same patterns I've seen before some of the most brutal corrections, so which is it going to be this time? Okay, here's where things get absolutely wild. According to the latest CryptoQuant data, the spot average order size on Hyperliquid has exploded since late April, and I'm not talking about a little bump, I'm talking about a massive surge that screams institutional involvement. Think about this for a second. During the early year slump, when retail was capitulating and selling their bags at a loss, who was buying? Small fish, scared money, people throwing in $100 here, $500 there, hoping to catch a falling knife. But look at what's happening now. The order sizes have grown dramatically. We're talking about whale-sized purchases that dwarf anything we saw during the bear market phase. This isn't your average retail FOMO. This is calculated, strategic accumulation by players who have serious capital to deploy. And here's the kicker. When order sizes grow alongside price action, it's not just speculation driving the rally, it's real institutional-grade capital flowing into the ecosystem. This is the difference between a sustainable bull run and a pump-and-dump scheme. But wait, it gets even better. Let's talk about the derivatives market, because this is where the real story unfolds. Hype's futures volume bubble map is absolutely lighting up between $35 and $45, exactly where we've been trading recently. These aren't just random trades, folks. We're seeing those red, overheating bubbles that indicate massive leverage positions by whales concentrated right at these levels. Now here's what this tells us. The smart money isn't just buying spot positions and walking away. They're taking leveraged exposure, which means they're extremely confident about the direction. When whales are willing to risk liquidation by going long with leverage, they know something the rest of us don't. But here's the most bullish signal of all. There's virtually no volume below $30. Think about what that means. it means hype's price floor has permanently shifted higher. The old support levels? They're irrelevant now. We're operating in a completely new price range, and that base around $35.40 appears to be rock solid. Now let's dive into the technicals, because this is where everything comes together beautifully. Looking at hype's daily chart, we're seeing a textbook recovery from the recent dip. We're holding strong above $44, with solid support from the 50 EMA at $40.68 and the 100 EMA at $35.61. And here's the beautiful part. Both EMAs are trending upward, creating this ascending support structure that's absolutely gorgeous from a technical perspective. The RSI is sitting at a healthy 54, which means we're not overbought. We've got room to run without triggering massive profit taking, and while the MACD is still in bearish territory, the histogram is flattening out, which often precedes a bullish crossover. This cooling off phase we're seeing, it's not weakness, it's consolidation. It's the market digesting the recent gains and preparing for the next leg up. And if bulls can reclaim momentum above $45, we could see hype smash through its all-time high like it's not even there. So here's my take, and I want you to listen carefully, because I'm putting my reputation on the line here. Based on the whale accumulation patterns, the derivatives positioning, and the technical setup, I believe hype is setting up for another significant bullish leg. We're not just talking about breaking the all-time high. We're potentially looking at price discovery mode where the sky becomes the limit. My target? I'm looking at $65.75 in the near term, with potential for $100 plus if the broader crypto market cooperates. But here's the key. We need to see that break above $45 with volume. That's our trigger level. The risk? If we lose the $40 support level, this whole thesis gets invalidated and we could see a retest of the $30s. But based on the data I'm seeing, the probability of that happening is relatively low. The smart money is positioning for a move higher, and when institutional capital starts flowing into a relatively small cap altcoin like hype, the price movements can be absolutely explosive. What do you think? Are you seeing the same bullish signals I'm seeing, or am I missing something crucial? Drop your thoughts in the comments below. I read every single one, and I love hearing different perspectives from this incredible community. If this analysis helped you understand what's happening with Hyperliquid, smash that like button and subscribe for more deep dive crypto analysis. And hit that notification bell because the crypto market moves fast, and you don't want to miss the next opportunity. Remember, we're all in this together, and knowledge is power in this space. The more we share and discuss, the better we all become at navigating these volatile markets. This content is for educational and entertainment purposes only and should not be considered financial advice. Cryptocurrency investments are highly speculative and carry significant risk, including the potential for total loss of capital. I am not a licensed financial advisor, and you should always conduct your own research and consult with qualified professionals before making any investment decisions. Past performance does not guarantee future results, and the crypto market is extremely volatile and unpredictable. Only invest what you can afford to lose, and remember that all investments carry risk. This analysis represents my personal opinion based on available data and should not be the sole basis for any investment decision.